Support for Radio Friends comes from OsteoStrong. Improvements in bone density, strength, and power can be achieved by weekly 5-minute no-sweat sessions on their 4-spectrum machines. These isometric robotic machines safely emulate high-impact loading on different parts of the skeletal system, which stimulates activity in bone-building cells. Balance and agility can be improved by 2-minute sessions on vibration plates. Every session is supervised by a trained coach. Learn more on Facebook or call to set up a complimentary wellness assessment and session. Good morning. Welcome to Radio Friends on Thursday, February 24th. ALEX LaBRUNERIE is with us from LaBRUNERIE Financial. We were talking before we went on the air. Alex knows quite a bit about money. We were talking about the fact that the first of the year here, a lot of the money that was made in the stock market last year has kind of evaporated as we get into the first part of this year.
Yeah, Paul, it's been one of the January, and it really rocked downward in growth stocks. A lot of growth stocks were down 15% to 50%, depending on the stock.
Now, is this something that people should be alarmed about, or is this, in your opinion, part of the ups and downs in the market?
I think it's the year before we were almost a near record return, so it was to be expected in a way. So I do think it's the normal ups and downs. It's still early in this year, so there's time for the growth stocks that are down now to rebound.
Do you feel that by the middle of the year, everything that was lost in the first part of this year will be made back?
Hard to say on that, because the driver on what's causing a lot of the sell-off and the concern, and maybe Americans' disquiet feelings towards the economy is inflation, and we've spoken about it before. You and I have, and it is now coming to the time where Jerome Powell is going to raise interest rates in March. So just around the corner. And Wall Street does not like increase in interest rates because it could dampen consumer spending and maybe put off business investments or mergers. Rising interest rates means we have to pay more for the money we borrow. But it may need to be done, several times this year, the increase of interest rates. So there's going to be a lot for the market to overcome, and inflation has to leave our economy by next year.
Okay, so when interest rates go up, does that help reduce the inflation?
It does. It stops the borrowing. It makes people think twice between borrowing. It's meant to slow down the volume of money in the economy and the economy itself.
But that can also slow down the economy growing.
It could create a recession. Yeah.
Right. So it's a real thin line that has to be. The one thing that I find so difficult to understand in my mind is how the stock market can just fluctuate on one or two words issued by the Fed.
Yes. Yeah.
One or two words can make it go up or make it go down. Is it really that fickle?
I think it's a little overwrought in the last few years, but definitely the bond market, is dependent on what the Fed says, because if what people may be seeing with their bond holdings so far this year, Paul, is their bond holdings have dropped in value maybe 2 or 3%. And if you're only making 2 or 3% in interest, then you're cruising for a zero or negative year in the bond markets. So the bond markets are definitely hardwired, connected to the Federal Reserve's mind, and wants to know what the Fed is thinking on interest rates. Growth stocks and other stocks, are very much tied too. However, they're not. They have a whole business that they can grow, and it can be a little more immune.
So
inflation is the big concern for all of us, though.
What do you say to somebody listening to us now, perhaps just now starting to get into investing? They're a young person.
Yes.
And they're just now starting to invest, and they're concerned about what they're seeing. Do you say, put that aside and think about it in the long run?
Yes. The young person, and 40 or younger, should not worry about the momentary volatilities. That, this will be a blip in the charts 20 years from now.
Now, what about somebody my age, in their 70s? If you have money invested, what do you say?
Make sure you're diversified and that you are reviewing your risk in your portfolio, that you don't have too much of one investment or another versus another. Be diversified and review. And be a little more concerned, but not panicky.
Right.
But inform yourself and study and work with your advisor.
And you have to decide how much gut churning you can accept.
Yes, it may be. Don't look at the quarterly statement this quarter.
When it gets like this, when things are good, I'll look at it every day.
That's
I'll
right.
track it every day. When it starts going down,
that's right.
Forget about it for a little bit. Just let it sit there, and hopefully it will come back again. Yeah. But it's important that you do put money aside and save.
It is. That's right. And, there are opportunities when the markets are down like they are. The growth stocks are down. The oil companies are not down right now. But there's value to be possibly some good opportunities.
Yeah.
So
you're never too young to start saving.
No.
Never too young.
And probably never too old to stop.
I guess not. But the important thing to do is decide what you can handle personally, and you talk to your personal advisor and say, I can go a little bit with roller coaster, or no, I can't do that.
That's right.
Lead me in the right direction.
That's right. And part of that measurement is when do you need them? If you need the money in 2 or 3 or even 5 years, you really should stay off the roller coaster, because there is a chance you could lose.
Yeah.
Serious.
Yeah, like poor Mark Zuckerberg.
Like Mark Zuckerberg. Hopefully he didn't need that $30 billion.
$40 billion. I read
that he lost.
He lost $40 billion, but he still has 2 or 3
billion left over. Yeah.
2 or 300 billion left over, but he lost $40 billion. How can he? I can't even imagine.
Yeah, I know.
What it feels like to be that rich and to say, "Oh, I had $40 billion wiped off the books today."
Yeah.
But anyway, if people want more, it's an interesting thing, and we all need to be saving. No matter what you save, put something aside every week or every month.
Absolutely.
All right. People want more information, Alex. How can they?
Well, we're here in Columbia, and 573-449-5313.
Okay. And if you go in on Friday, everybody there wears bow ties. You can wear, Alex, right. You wear a bow tie every day, don't you?
Yes, almost every day.
Yeah, Friday is bow tie Friday. In Hawaii, they call it Aloha Friday, and everybody goes to work. The bankers and they all go in Hawaiian shirts, no coats and ties.
Yeah.
Okay? So this is Alex's version of Aloha Friday. It's bow tie Friday. So. Thank you, Alex. Pleasure having you here. 573-449-5313 for more information. And if there's something that you would like to hear on Radio Friends, I would love to hear from you. As I say, just take a little time, drop me an email, pepperp@missouri.edu. Have yourself a nice day. Bye-bye.